And joining me now to provide more insight on the day's market performance is Cremen from Aviceworx. Caroline, thanks so much for your time this afternoon. As mentioned, it is a big week for monetary policy, and I guess the one we all will be looking out for is that Fed meeting taking place or starting on this week, and we'll get that decision out on Wednesday. Consensus is that we will probably get another hold from the Fed, but I think the conversations around tariffs and the prospect of an economic slowdown will be more prominent at this meeting, right?
Well, I don't know. It's definitely going to be a focus of the Fed, probably discussing that behind the scenes. But I think with, kind of sensitivity to Donald Trump, you wonder how strong, Jerome Powell is actually going to come out against that. But it's definitely weighing on their mind. We're probably going to get a hold, the Fed has led us to believe that. But I think the market really is going to be looking to see as to, how they're viewing it, even if he does address it very sensitively. And it's coming at a very sensitive time in the market, as we've seen a lot of volatility last week. You've talked about the Trump tariffs being all over the place. So I don't see too much good coming out of it. But maybe it will kind of soothe the markets a bit, although I doubt that very much. I think we're in for a very, very bumpy week.
And how much of an impact do you think that will have on our SOB meeting coming up on Thursday, considering that things at home, they seem good? I mean, inflation still at the lower end of the SOB's target, but that global picture not looking good.
No, the global picture doesn't look good, especially with the kind of friction we're having at the moment with the United States. I think the general consensus is that we are going to get a 25 basis point cut. But I think, we do need to see that there are risks with that. And the SOB may very well say, well, if there's a lot of risk, a lot of the tariffs, we just don't know where things are going, how that's going to impact South Africa. So I wouldn't be too surprised if we get a hold on that. But I don't really think, like you said, from an economic position, that we need that necessarily in South Africa. But, maybe the Reserve Bank, I'm sure there is talk of just maybe taking a more cautious approach.
Let's move over to some company news. Now, the booming online betting market working in Sun International's favor, another record-beating performance on that front. And this is stark contrast from, its regional casinos where growth is quite tepid. Walk me through your analysis of those numbers, Caroline.
So I think they're quite good. I mean, I think I've always said I do feel that the consumer is probably a little bit more stretched than people notice. So I'm always happy to see revenue grow, even if it grows at a low pace for businesses like this, because this is your pure discretionary expenditure. So your revenue up 5%, that's not great. But, there were a lot of bit of restructuring, I think, with the Pretoria casinos. There's definitely a move in product mix from slots because, the online is good, but it does cannibalize, some of your super slots. So I think it was okay. Sun International clearly passed through a very difficult time. It's very nice to see that they've got their debt under control. Very nice to see that their dividend is there as well. So they're sticking to their knitting. I wouldn't expect great things from this company going forward because, like I said, our consumer is a little bit stretched, and we'll have to see how the VAT increase hurts consumers, because that also is going to be levied on non-discretionary goods. But nice to see Sun International in this position in such a difficult economy.
Let's move over to MTN. Those numbers not looking great, and I think we've spoke about them before. Earnings down nearly 70%. This, of course, on the back of currency wars in Nigeria, as well as the impact of the conflict in Sudan, just weighing on its overall performance. I think those numbers seem to be priced in, because looking at MTN's share price, it's up close to 2% this afternoon. Is it just that on the back of, I guess, optimism around the outlook and, those hikes in Nigeria coming through?
I don't know. Our market is relatively okay today on the back of the Far East. But I think what I loved about the commentary from MTN was a strong underlying performance.
Yes.
And, so if you strip out the Sudan and then Naira devaluation, everything else looks okay. I laugh at it because the reality is MTN delivers product in some very difficult parts of the world. This is not the first Naira devaluation we've had. the Sudan is not the first area, where there's been a conflict. I mean, I think they sold off the Afghanistan division this year as well. So, yes, a strong underlying performance, but your results are still really bad. If you're a shareholder, it's not something you actually want to see. And as much as I want to see MTN succeed, from a shareholder's point of view, if you're going to go and buy the share, you've got to understand that sooner or later you're going to have a year like this. But hopefully from this level, things can only go up, probably. But then do you want to hold for the long term?
And we talked about maybe MTN being, or rather share price, just gaining traction on the back of the overall positive sentiment we're seeing. I'm looking at Thungela as well. They're also up about 6% this afternoon. But those coal prices, softening coal prices, really hurting the group's bottom line, with profits down 29%. Your thoughts around those numbers, Caroline?
Yeah, look, obviously when you look at the numbers, it doesn't look great, but the reality is they have strong production, they have strong sales and control, and they seem to be managing, the whole Richards Bay issues quite well. So I think when people look through to this, you can actually see a relatively well-run company. The energy mix globally is not changing to away from fossil fuels imminently.
Yeah.
So well run, they're sticking to their knitting, they're controlling all the adverse situations around them. So I don't actually think that was so bad, considering this was a commodity play and prices are actually down. So
I think
not
bad. All right. In other big corporate news, Caroline, and I think this shocked quite a few people, was Standard Bank's deputy CEO, Kenny Fihla, being poached by ABSA to replace interim CEO Charles Russon. I mean, some uncertainty coming through for ABSA because they've had about 7 CEOs in the last 7 years. But I guess, what does this mean for Standard Bank, considering that Kenny was supposed to take up the CEO position?
Well, I think over the weekend it was actually funny because I was actually reading something about, the share options, the Standard Bank executives have been given. So the share options at ABSA must be really attractive to make a move like that. But maybe he just wants, something more meaty that he wants to actually sink his teeth into. I hope he will do quite well because ABSA, as we all know, has really been the laggard. There's a lot that actually can be done to actually fix that bank. I think Standard Bank is probably running as well as it can at this point. I don't think it's going to make a huge difference, to ABSA when he lands there, because it does take a long time to change a culture, to change things around. For Standard Bank, maybe more of a risk, because if you're a top guy, what you tend to want to do is you want to bring all your guys with you. So there might be a bit of a talent drift from Standard Bank to ABSA. I do think the talent at Standard Bank probably runs quite deep, but that for me certainly is a risk. It's not the name guys that's worries those guys kind of underneath. They're never featured in the media that tend to make the most difference. So we'll have to keep an eye out for that.
All right, before I get to your stock pick, let's just hit pause and reflect on some counters that have found favor with your industry peers.
It's TFG.
Okay.
So I think the retailers have been under unnecessary pressure. TFG looks the cheapest by far. It's trading well below its average forward PE rating over time. I can see a clear growth trajectory for the company. I'm very comfortable with that being my pick this week and keeping it at that.
Yeah, I'm going the China Internet ETF, KWEB. It's one we've chatted about before. And I'm just seeing increasing evidence that global investors are warming to China with some cracks in that US exceptionalism. Valuations are incredibly cheap. They're doing some amazing things in the AI space and others. And I think it's a neglected part of the market that's looking increasingly interesting.
All right, TFG and that China ETF. Let's start off with TFG. What are your thoughts around that count in particular, considering that we have that VAT increase that's going to come through and also just affect consumers' spending power?
Yeah, I think I'm very conflicted about that one because, TFG is a very, very well-run group. I just think, there's a lot of non-company headwinds facing us. You spoke about the VAT. I also think our economy is probably in a poorer shape than we expect it to be. And I think what is not discussed there is that the increasing drift of consumers to Shein or to Temu, which is really taking away a lot from these retailers. So where we haven't seen that kind of level off, the online Chinese companies, the level off, I would be kind of hesitant to put my money long term into something like a TFG, although, like I said, it's a fantastic company. On the China tech ETF, yeah, absolutely. I think just people need to, I do think that sector is probably one of the sectors that is actually undervalued. It's undervalued for a reason, though, and when you invest there, people need to understand why. It's because there have been periods in China's recent history where government really decides to target that tech industry, individual companies or the industry as a group, and then everybody sells up and moves out. Sentiment towards China by international investors kind of goes from two extremes. About a year ago, it was, no, we all need to get out, we'll never get back in. And now people are looking in there and say, oh, well, we're all going to get back in. So I think just bear that in mind. If you're going to buy into this, I think these are fantastic companies in that ETF, but bear in mind that it's going to be a heart attack stock from time to time, and you need to be able to deal with that and stick with it through the long run.
All right, so that's not your stock pick. What are you hanging your hat on today, Caroline?
Okay, well, I'm going to pick Eli Lilly. So Eli Lilly is the American counterpart almost to Novo Nordisk. These are the companies that are producing the anti-obesity drugs, the GLP-1s. I'm going for this. It's actually slightly up this year, and it seems to be pulling away a little bit from Novo Nordisk as far as returns are. I think it's got a couple of advantages. Number one is that it's in that very, very growth-oriented space. But also, GLP-1s, there are studies now that actually are going to be implemented to see if those drugs can be used for other things like, alcoholism or drug addiction or any type of addictive behavior. The advantage of this is that it is based in America, and we know Donald Trump wants everything to be onshored.
Yeah.
So it's probably going to be a beneficiary of this against, as opposed to Novo Nordisk, although I do believe there's space for both in a portfolio. But right now, this is probably the better option.
All right, Caroline, thanks so much for your time and taking us through trade at midday. That was Caroline Cremen from Aviceworx.